let's look at Nigeria and also the major markets, getting the big picture. First off, read this disclaimer carefully. We will look at this country right here. We go to stock market and we are going to Africa. Here is the distance from the 52-week lows, 22%, and the distance from the 52-week highs. The ETF is the Global X MSCI Nigeria ETF. NGE is the ticker. Here you can see the consumer price index change for Nigeria. This is the total tax rate, and this is forested area. Let's first look a bit at the seasonality of this ETF. This is between 2015 and 2019, the percentage of months in which it closed higher than it opened. We are currently in the later part of May, and you can see that June is characteristically a strong month for this ETF. That's interesting. Let's now jump into the charts. Weekly data points all the way back here to the beginning, which is 2014, June 2014. It is down minus a whopping 85%. Obviously, Nigeria is in a very deep and nasty bear market. From a purely technical standpoint, it is difficult to become really bullish right now. Then again, after such a huge fall, it can be also a bit dangerous to be super bearish, because a lot of bad news are priced into this market. And if you look at the fundamentals, which we will do soon, they are actually quite decent. Very cheap. Okay, this is a classic case of really aggressive bearishness. There is, however, some bounce at the moment, some higher highs and higher lows. That's interesting. If we look at RSI here, in these lows we were absurdly oversold. Hence the bounce was expected. The AD line here, accumulation distribution, is at a very low level. Hence there is very little sign of bullish sentiment in this ETF so far. However, I would definitively have Nigeria on my list of potential bullish opportunities. You need to think a bit like a contrarian. Yes, so times are rough in Nigeria. The statistical correlation between the S&P 500 and Nigeria is minus 47%. Let's jump to daily data points. Okay, the accumulation distribution line is not showing anything bullish at all, so yeah, rather bearish. The RSI is, however, a bit bullish. There is some bullish divergence here between price action and the RSI. RSI being more bullish. So there is something happening here. We are above quite a few of the key moving averages. That's good. There's obviously some key resistance levels here from, the 100 and the 200-day moving average. For all intents and purposes, this is not like any kind of screaming buy, but something is happening. And when you have, a market that is down this much, whenever you have a move, you can have a substantial gain. From this low here to this high, that was all of a sudden 21%. This rally here was 16%. Hence, if you are on a trading platform where you can use, as an example, a trailing stop, which follows the price, then you can lock in your gains, and then you can, you can protect your winnings, and even make some money being a bull on a stock market like this. Okay, so this looks interesting. It's way too early to be super bullish here, but that's why we can look at other kinds of data to get a bit of a bigger picture. Okay, here you have Finwiz, some of the performance data. Nigeria is down minus 28% year to date. That's obviously quite bearish. However, the dividend paid by this ETF is huge. Okay, 7.5% dividend. That's a juicy dividend. Okay, so that's interesting. Let's look at some of the fundamentals. Okay, so let's compare with the S&P 500. Okay, here is the S&P 500, here is Nigeria. Okay. Okay, so looking at the fundamentals, the price to earnings ratio in the USA is 18 at the moment. The PE here for Nigeria is 3.64. Okay, that's really low. The price book ratio for Nigeria is 0.52. That is extreme value. USA is 2.72. Okay, that's a huge difference. Dividend in the S&P 500 is 2%. That's not exactly impressive. And as we said, the dividend here is in the Nigeria ETF is 7.63%. That's a huge dividend. Hence, if you want to take on a long-term position in this ETF, you are paid to wait. Okay, so the number of companies is limited, 21 companies. Let's get some. Well, we do get very little data here from ETF.com. Maybe if we do take a trip to Google and go to the Global Access website, maybe we can get some more detail. So let's see here if we do preferably get some industry breakdown, maybe. Not much. We do get some companies here. So this is obviously a bank, cement, basic materials. Nestle, this is consumer staples discretionary. You got the banking company. Nigerian Naira, I have no idea what that is. Nigerian Naira. Okay, that's okay. Let's assume this is their currency position. MTN Nigeria Com sounds like communication services. Yes, seems like MTN Nigeria. Yeah, it is some kind of telecom. Yeah, that's interesting. The bank, FDN Holdings. What is this? FDN Holdings, commercial bank. Okay, so very heavy on the banks here. IBTC. That is financial services. Oh, hey, really heavy on financial services. Wow. Oh, this is a flour milling company. Okay. So to sum up, you got some basic materials, some staples / discretionary, but hugely weighted towards the banking sector. Okay. But then again, there is some serious value here. Okay. So that is Nigeria. Let's now get the big picture of the markets, looking across many different markets and timeframes. Okay, so let's first go to the old S&P 500. So this is what's happening now. We have gone up here to test the 100-day moving average, stuck here between that resistance level and the support at the 20-day. Stuck in a massive zone. There will be a big resolution eventually. Let's look at the VT. That's the total world stock market index. We do see higher highs and higher lows, so the bulls are in control. Long term though, it's very hard to imagine this being another bull market. But so far, you have to respect the fact that the central banks are pouring money into the market. They are being very accommodative. And as long as they are that accommodative, it is difficult to be short. But if you were to be short, it makes more sense to be it now than it was, back here. It is all about being a contrarian, which does has its merits. This is also why the logic behind looking at Nigeria for possible bullish opportunities now, instead of thinking, that the bearish opportunity is very golden, because if you are a bear, the bears have made a lot of money in Nigeria. Let's now look at the TLT, the bond market. We have, after this massive explosion to the upside, we've seen a bit of a rounding-ish pattern here. We did initially consolidate, but the consolidation, due to the recent pullback, we do have a rounding top pattern here. Resistance at the 20-day. So this is a bit of a dicey situation. For the bulls now, they really need to start pushing up now, because many people will see this pattern and start to think, okay, maybe I should be short. Okay, so this is one to watch out for. This is an urgent situation actually for the bulls. The bulls went from having a big gain to then just consolidating, but now they have put themselves in a bit of a tricky situation now, all of a sudden. Let's look at gold. Gold being on a massive tear, people are waiting for a correction that it doesn't seem to come. Because that's the saying, many people are like, oh, we're going to have a reversion to the mean, which would mean a pullback to the 50-day or even the 100-day moving average. But when you have a situation where people either want to buy gold or are buying gold, meaning you have very few actual bears, then it will be more difficult to actually get that full pullback. But all in all, this looks strong for gold. Rather strong. Let's now look at some other markets. Let's look at, no, not AVB, DBA. The agriculture ETF, okay. So if you look further back, you can see that this one has been a disaster, extreme bearishness. But then again, I think a bit like a contrarian. This is very early, but there is some potential sign here of a rounding bottom in formation. Very early, obviously very early. We are not even above the 50-day moving average, and it's forming a solid resistance level. But this is also one of those to watch out for potential bullish opportunities in the future. So that's the DBA. What other markets can we look at that are a bit, big picture? Maybe we could look at the BNDX. That's the total bond market ETF. Now that one is stronger than the TLT. As you can see, you don't have that rounding topping pattern. Well, I mean, in the bigger picture, it is weaker, due to this breakdown. But the most recent developments are nice. Let's look at the high yield bonds. Yeah, seeing some rally here. Solid resistance level here in combination with the 100-day moving average. Let's look at what should we look at? Yeah, let's actually go to investing. Now let's go to actually stock charts, because they have a lot of like breadth analysis. So let's actually do that. Here are the breadth indicators. Okay, so here is the NGE advanced decline line. Let's look at that one. Let's go to the weeklies if it is possible. Yeah. Let's look at the McKellen oscillator. That's also rather important. Let's go to the weeklies, going way back here. So let's look at some of the the prior pullbacks, like this. Here you can see the low formed on the McKellen oscillator and then the big spike. You can see that the low we formed, well, actually with the McKellen oscillator formed the low here, which was not that as predictive as it was back here. But we've gone from this, how deep was that level actually? Okay, so throughout the entire history of the McKellen oscillator, this was like the deepest level, and now just recently, after this rally here, the McKellen oscillator reached the highest level in history. So we are officially living in the most extreme time in the market. This is why I'm constantly harping that you need to be market neutral. This is not a safe market. This is a crazy market. This is a market that internally, on a deep and profound level, it has broken down. So even though we've seen a recovery here, this is the SPX, this is a broken market. This is super dangerous. This market could easily soar 50% and just easily crash 50%. In such a condition, you definitively want to be diversified. So let's look at some other numbers. Let's look at the summation index. Let's try to do the weeklies. Yeah, we can do the weeklies. It really varies. Some indicators, they only you can only get the data on the dailies. So let's look at some previous bear markets. Okay, so let's yeah, we do actually get the financial crisis here. Okay, and the dot-com bubble. So here we have the dot-com bubble. Here we have the financial crisis, and then you can see the summation index. It spiking here in the early recovery phase. This is the deep level it reached during the bear market, and this actually went further down than we were recently. But notwithstanding the gains we have seen, the McKellen oscillator, it's just a bit above here, the 0 line. As far as some of these indicators, I will explain them in some of the future videos when I have this educational segment. But let's just jump through the charts, because you can easily, like, even if you do not know technically, I mean, you do not know the logic behind some of these indicators, you can see the patterns quite clearly. Okay, so let's go to the weeklies, if it is possible. Yeah, it is possible. Let's just look at some of the history. Here we have the financial crisis. It's crashing down here, almost reached the same level recently. Then it spikes here during the initial rally. You can see that we recently had a very sharp spike. But if you compare this spike, like this rally here and this spike with this one, then you can see that here we do have like a double bottom. And then we have the spike, but this is one of the most dramatic moves we've had in a very long time. We just go almost straight down and then straight up. Yeah, so that's the percentage of stocks above the 200-day moving average. So you can see that there are quite a few stocks that have made a rather decent recovery. Let's look. Are there any other? Yeah, let's do the Nasdaq Advanced Decline line. I mean, the Nasdaq has been super strong, but that's, you know, a lot to do with some extremely strong stocks. There's that. Let's do yeah, Nasdaq above the 200-day moving average. Let's look at how high this is compared to the history. So we is it the highest move? Let's actually go to the weeklies, if we can get the weeklies. Okay, so if we go all the way back here, this is all the way back. To get a higher level, we need to go back here. Yeah. That's the beginning of the post-housing bubble bull markets. Yeah, are there any other indexes we should look at? Nice bullish percent. Dow Jones Industrials bullish percent index. This is interesting. One of the concerns many traders have is that even though we have seen a very strong recovery, especially in the Nasdaq, and decent recovery in the S&P 500, the Dow Jones is still relatively weak, as you can see. That is certainly a concern. There are some sentiment indicators, empty list. Okay, let's look at volatility indicators. Not much. I am just going to click on these, and then you can just stop the video to look at them in more detail. Okay, so this here is the trend, momentum, and volume indicator. So these are like the essential chart styles with specific analytical focus. This is the trend direction and trend strength indicators, and then you can do your own analysis, because I'm assuming, I mean, not everyone of you have access to the pro version of stockcharts.com. There's the trend reversal, trend reversals with recrossing indicators. Here is the money flow indicators. Yeah, and then you have a momentum and rate of change. And yeah, and then you have overbought and oversold analysis. Yeah, loading the data. Okay. Here you can see that. This is measuring volatility. Okay. So, this gives us, the deep pulse on the S&P 500. Yeah. Yes, let's exit this. Like that. Okay, that was looking a bit at Nigeria and some of the major markets. Quite clearly, there is some serious deep value here in Nigeria. Much more than the S&P 500. I mean, the dividend was pretty darn huge, so you are being rewarded for waiting, even if you take on, a long-term, position, which can be a bit up and down. You do get the dividend. That's decent. When it comes to the overall markets, especially the S&P 500, which we analyzed in deep detail, the theme is that we are just in unprecedented times, and hence you gotta be very careful. Whatever you do, of course, let the trend be your friend.